Hey, welcome back to the channel. This is Alex with another week ahead video. And on this channel, we document the growth of a $100,000 account I've created for my newborn son. We're growing the account using technical analysis, fundamental analysis, and some news. And on the week ahead segment, we go over all the major markets. So the S&P 500, the NASDAQ, Bitcoin, gold, and silver, and see where they could be going into the future. If that's something you're into, stick around. All right, so we like to start every video with a news segment. And to start this week, not too much. It was a quiet start to the week. Only things I could really touch on was that some chatter out of Iran that they want to continue their nuclear program, which is not going to happen, of course. And then also we got some news after the bell that MicroStrategy is going to do another IPO, I believe, of some preferred shares of STRC stock. But other than that, I mean, we hit a new all-time high today. Market just keeps going up. And yeah, so with that, let's go check out the market monitor and see what's going on underneath the surface before we get into the major technical markets. All right, so for those of you who are new to the channel, the market monitor is essentially a collection of data I've taken over time. I track where all the stocks are, whether they're in uptrends, downtrends, or sideways. And also some internal indicators like VIX and long-term breadth and whether stocks are ending at highs and lows of the day. And this helps me with my investing process, because typically at market turns, you see it underneath the surface before you really see it in the broader market. And so if you guys are curious how the market monitor works, I linked a video in the description so you guys can go check it out down there. All right, so with that, let's go check out where we're at. All right, so currently we are market monitor yellow, and we are day 7 yellow, and we've gone 0.42% so far. A typical yellow cycle lasts about 8.8 days. So, we're really close here to an average cycle in terms of length. So about 2 more days is a typical length for a yellow cycle. And the average move in a yellow cycle is about negative 0.35%. So that's telling us, maybe the next 2 days will be negative days and push us into, a market monitor red cycle. Because as you can see, the distribution count is at 5. And once we get to 6, that will push us into a red cycle. So, 1 day of maybe negative 0.8% would do it for us. So something I'm going to add that's a little bit new here is check out this heat map. So if you guys don't know what a heat map is, it essentially shows the movement of all the stocks. And then also the larger the block, the larger the company. So as you can see here, all of the really large companies have done well today. And all of this, there's a lot of red under the surface below all the big squares. So that's just something interesting to note that I'll start doing on these videos going into my stage analysis, which will give you a clear picture of the percentages of how many stocks are in uptrends and downtrends and stuff like that. So with that, let's move on to that. So as you can see here, the stage analysis, stage 1 is a sideways market. Stage 2 is a uptrending market. Stage 3 is a sideways market after an uptrending market. And stage 4 is a downtrending market. And as you can see here, I have this average 16 row. And that basically just takes the last 16 data points in each of these stages. And it just gives you kind of an idea if you're above the 16-period average or below the 16-period average. And as we can see, breadth underneath the market is actually deteriorating. And, on average, it's starting to trend into a negative kind of situation. So we're monitoring that because the markets keep making new highs, but there's a lot of there's some things that are really exploding. Maybe besides just doing the major market updates, I can show you guys all these stocks that are exploding, and but then also do the major markets because there's a lot of things deteriorating, a lot of speculative stocks exploding, and the markets are still at all-time highs. So that's typically what happens at turning points. So as you can see here, the VIX, I mean, it was sort of an up day and the VIX went up. So we have another VIX day. So there's a lot of people buying protection on days like today when the market's up. Yeah, just we've had a couple of them. And I've noticed that in cycles, when you start having a few of these things, it can lead to a really nasty pullback. And as you can see here with the COR, so this is a new column I've included, and the correlations of stocks has moved up dramatically, about 1. So we're starting to see increase in correlation, which means that, you know, we should have a downturn here pretty soon. And then number of stocks moving 20% in 5 days has finally started to come down out of some really overbought levels. And then we had 51 lower lows, and then, you know, a lot of stocks ending at the lows of the day, as you can see in the bear C column. All right, so moving onwards to some more internals. This 45 or this BB45 that you guys see here, that's just stocks above or below their 45-day Bollinger Bands, just whether things are extended or not. And that's coming out of an overbought situation over there. You know, we had 33 stocks making 5% moves to the downside on large volume. And that's really interesting that the markets are up today and we have this many stocks going down. That's typically, you know, what you see in a really severe down day, a 33 reading. And then this is something that was really interesting. Like, we've already been in a downtrend with a lot of stocks, even though the market's going up. And I mean, technically it's like a buy signal, but I think that this could just turn into an even more negative down wave. So it could be worse. It's just something interesting there. And then the TD sell has been kind of working off its overbought reading ever since like a couple days ago, like 10 days ago. So there's that. And then moving onwards to our final tab of the internals is the anxiety index. We're at about 24,000. And then as you can see, the 63P is continuing to deteriorate from a high of 80. And then this is something that's really, really interesting. This reading here, this NY, this is a long-term breadth reading. And basically, you know, anytime this thing goes below 0, it triggers a bear market. So it's very, very interesting. I mean, perhaps it's because we have so much negative data from the beginning of the year and going into April and that period. It's bringing down the breadth. But essentially, like, this thing at 11 and we're at all-time highs, it's just very interesting. Like, normally it's supposed to be in the 30s or 40s or 50s, and it's at 11. So if we get a downdraft here, it could push us into a just a bear market signal on the long-term breadth, which would be very, very interesting. Because you're starting to see a lot of things that are kind of akin to the final things of a bull market, like, you know, very speculative stocks exploding, just a lot of greed in the market, and it's just gone straight up. It's been a lockout rally. Makes a lot of sense for some sort of a rug pull to happen. You know, any time now, you know, especially going into September, which is always pretty nasty. All right, so with that, let's get on to the major market update and yeah, just see what's going on in the markets. All right, so what you guys see here is this is ticker symbol IWV. This is the Russell 3000 index, and this is the index that I like to use for my personal trading, because I trade a lot of smaller cap stocks, not necessarily the major NASDAQ 100 large cap tech stocks. So I like to look at this, and my market monitor uses this index just because it's broader and it makes more sense to me for what I trade. But as you can see, this is my cycle forecast. So at the beginning of the market monitor segment, I put the you know, what cycle we're in, whether green, yellow, red, or orange, and then I'll put a little forecast out there. And I mean, I think yeah, 8-9 bars. Actually, this one's a little bit. I'll fix this right here. This one's a little bit 1 day early. Yeah, so that's about right. Maybe a little higher here. There we go. So as you can see here, this cycle forecast has been pretty good. You know, I mean, within a decent range. Now we're above average. But you know, with one more down day of like 0.6%, we could be right back down to the forecast lines, and then right after this would be have a red, and I'd do a new forecast line. But so what I like to do on this channel is so I consider myself a student of Wyckoff Analysis, which is you know, the study of the law of supply and demand, the law of cause and effect, and you know, wave analysis, comparing things, comparing certain candles to other candles, certain waves to other waves, and seeing if there's enough cause or sideways accumulation distribution in order to push something one way or the other. And so yeah, I typically don't do the TA on IWV because it's the volume is not as active as, say, the S&P 500. So we'll move over there to the S&P 500 just to start off our Wyckoff analysis for today. So as you can see here, I like to put an anchored VWAP at the start of every kind of new green cycle because it basically just signifies where the control is, or where everybody's average of people who have been buying this last wave. And as you can see here, everybody who's bought this last wave on average from the start of it is up 2%. Okay, so that's just interesting to note. Okay, now what you can see here is we had a pickup in volume on this wick right here, and we had a pickup in volume on this wick right here. So what I like to do just on a micro level is I'll put in an area here, okay, because this is basically going to be our support, or actually I'll change it to green. This is going to be our support area because, as you can see, like I like to use these smartest guy in the room areas. Essentially, when there was a candle that was going a certain direction and people who are obviously smarter than the people who are pushing it that direction pushed it back, and then it moved up after. Okay. And yeah, it just the market seems like it's also has a smart guy area right here. Today we pushed higher into new high ground, and this is basically the first naked sort of candle that we really tried to push and make new highs, and it seemed to get rejected here, and we closed below or inside yesterday's high, which would be an upside reversal. So that's a bearish candle. So we would expect, you know, continuation to the downside, especially given the volume signature. Yeah, it just seems like there was a lot of buying, but there was also enough selling to finally push it down. I mean, the market is still bullish, but one thing I like to do is I like to relate this up wave, which was about 5.5%, to this new up wave right here after this red candle right here. So it's about 1.2%. So on my previous video, I kind of explained it the way I have these things colored. But essentially, like, even if it's a red day, unless it goes below yesterday's low, I don't count it as a red candle. I just color it gray. So for instance, like this candle is gray candle because it didn't undercut the previous day's lows. It just helps me look at the waves, you know, the buying and selling waves. And so we can compare these waves, right? So this wave went 5.5%, and this new wave is much weaker, and it's kind of been chugging along, aka our yellow cycle, and it's only up about 1% in the same amount of volume. So if we can take this volume right here, how many days of that? So that was 9 bars, and the average, is, what is that? The average is about 65 million. Okay, so if we just do some short math, this amount of volume here only was able to push up the S&P 500 1%, versus this amount of volume from here, 1, 2, 3. Okay, so that was another 8 bars. So literally the same. I mean, it looks like there's pretty much the same amount of volume. Was able to push it up 5.5%, and the other was only 1%. So there's a 4% difference on the same amount of volume. So there's a lot of selling going on in here. There's a lot more people distributing silently in this area. And so that's giving us our cause. Because once, all these people who have been buying up here and trying to push up the price realize that they're wrong, they realize they bought the top, and they're the first guys to instantly sell. And then once the guys who bought down here are selling and the guys who bought up here are selling, then there's no more buyers, and you just get overrun with sellers. So that's kind of how it works. So yeah, I mean, it just makes a lot of sense for this wave to be a little bit weaker. Still in a very strong market, but yeah, just it looks like they're distributing up here. And another thing I like to look at is if you go, if you check this indicator up here, which is the distance from the quarterly moving average, this is this red line, and the yearly moving average, which is this green line, you can see that every time the market's had a decent pullback, it's pretty much stopped here, right at 6.5% from that moving average. And we have been kind of trending above this area for quite some time, and we peaked out right here at about, what is that number? Wow, 9.5% from the quarterly moving average. And then now the quarterly moving average has caught up, so it's gone down a lot. It's gone down to about 7.5%. But anytime a new kind of bull market starts, which I think this is a new bull market that just started, you get a test. You get a retest of this quarterly moving average, or even a retest of the yearly moving average every time like a new bull market starts. Now in COVID, it only tested the quarterly moving average, but something like this is well within the cards. So that's kind of what I'm thinking here, is like we're gonna at least test this average at some point, right, this year or maybe next year, and that could happen sooner than later, going into September. Maybe that's what we test. So right there. So that's S&P 500. It's extended. Looks like we had an upside reversal, and we could come down at least to here, to the lower end of this range that of this new upwave. And if it gets below this area, then you could see a crack to this next area right here around 600. So moving onwards to the QQQ, which is very similar. I have a little bit more lines on the QQQ because I'm just tracking some positions that I'm in. But let me just check this out, and I'll show you guys the same thing. Now, the QQQ is pretty interesting because this is the same level that we drew on the S&P 500, but the QQQ has obviously been outperforming. So that's something interesting to note, right? Because you want to see the QQQ outperform in a bullish market, because tech stocks are supposed to outperform. But I mean, yeah, I mean, it looks actually a lot better than the S&P 500. It doesn't have kind of a smushed candle like the S&P 500. But if we see in here, same kind of a thing. This market has gone up 2.5% for this upwave versus 4.6%. Okay, but actually, if we just do the same thing as S&P, it's 5.5%. So similar story, 1% of outperformance versus the S&P 500. So that's just interesting. And maybe this is, showing that last bit of strength before the pullback. But we could also see this thing kind of pull back similar to the S&P 500. There's not much differences between the two. So yeah, most of the stuff I just said for the S&P 500 can count towards this thing. So let's move on to Bitcoin, because Bitcoin's very interesting. We made this call on the last week's video that Bitcoin was looking very strong. It was breaking out to new all-time highs, and that a pullback would be normal and natural. And what we do in Wyckoff is we already know, okay, with this pickup in volume here, that the uptrend, the upwave is over, and we're into a reactionary phase. And now what we do is we just watch the reaction. If it's a deep reaction, a very bad reaction, then of course that's more bearish. But if it's a reaction and it's doing what Bitcoin's doing, and it's not really going down that much on heavy volume, that's good. That's a bullish action, and I could show you guys some examples of that. Like there was an example on this stock. LAU was making a big run here. It went up, 290%, right? Had the climactic candle here, pulls back, pulled back about 25% on heavy volume, but kind of stuck here, and then boom, had another 50% run. So a lot of people who say, oh, volume is bad and blah, 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 you know, I don't think so. Just, you have to watch the spread and of the candle. So going back to Bitcoin, you know, we had this big move, right, off of this wave right here, and you know, a lot of selling, and then instantly after the selling, we had a gap up. That's bullish, and a lot of kind of decent size volume here, but it's not below this candle right here. So with that, you know, this is a very, very bullish reaction in Bitcoin, and I would expect that if it needs to go sideways a little bit longer and kind of digest the breakout. But if it digests this breakout, I mean, sooner than later, it's going to continue the upside because it's the clear skies. You know, there's nothing wrong with Bitcoin here. Yeah, nice to see big volume. So this is the biggest volume. This is where everybody sold all their Bitcoin. Because once it breaks new highs, a lot of people, some smart people too, like they love to sell new highs because new highs are considered the greedy time. But then for other investors, new highs are a signal of a new bull market. So, you know, if you're selling new highs, you could actually miss out on a lot. So, you know, it's hard to say whether you're trading the range or trading the breakout, and sometimes breakouts fail. But when they don't fail, they go up a lot. So what you want to do every time you're watching this kind of a breakout here is you look at that candle that has the most amount of volume where everybody sold their Bitcoin, right? And then we gapped above it. And so as long as this, you know, this market can stay above this candle here, you're going to have FOMO. And that's how breakouts work, is like the majority of people who buy at the low end of the range, or who buy down here, or who are buying fear down here and selling the new high, they have FOMO because they sold the high and it keeps going higher, right? And they're going to miss out. So it's sometimes the smart money that has FOMO because they always are selling the new high. And so as long as the price stays above where all those people sold, you can have big breakout FOMO rallies. And so that would be that line in the sand right there where the majority of people sold. And Bitcoin did something cool where it just gapped up above that and they tried to make a FOMO rally, but it needs to react a little bit. So that's kind of what I see in Bitcoin. Like it's as long as it stays above this candle, or, you know, within above the 50% line of this candle, it's all good. There's nothing wrong with it. Okay, so that's Bitcoin. And then gold. Wow, look at gold. Yeah, we made a video about gold, how it was, you know, going to bounce off this quarterly moving average right here, and it looks to be like we're doing that. And I didn't even look at gold until right now. So this is nice. I mean, this thing is going over to the new high. I mean, I think in the other video I was like wanting it to like do something like this and then instantly V, but you know, there's this support right here on this average. So, you know, it could be very bullish if this thing just goes straight up from here. And so, I mean, if we look at this range in gold, you know, we had the top here with this volume signature here, right? And then every time we got to the lows, there's a pickup in volume here, pickup in volume at the lows. Let me see here. Pick up in volume at the low, pick up in volume at the low, and pick up in volume at the quarterly moving average, which is the new low. So seems to be like they're accumulating gold, right, in this range. Because if you look at the highs, you know, there's not that much volume at the highs. They're not really selling the highs. Well, there is. They sold this high. So, you know, maybe this line in the sand right here is kind of what we're looking at, because that's where the smart guys are trying to sell. And then also they sold this one. Okay, so, and we're trying to gap above that. So that's good. And they tried to sell it down and make a new lower high right here, and they got rejected with this gap. So that's, gold could do some FOMO rally stuff here. So that's interesting there. Okay, so that would be gold. And then if we look at silver, silver's way stronger than gold. It's not even in a sideways market. It's just in an uptrend, bullish trend. So a lot of the silver miners that we're in are doing really well. And silver just looks like it's about to go into some really bullish phase here. You know, if you look back on the monthly chart, I mean, this thing, yeah, it's from, this is 2011. Now, if we draw kind of a smartest guys in the room sort of an area from there, that would be like right there from here, this side right here. And then the next area would just be, if I check this out, yeah, right here. So I'll just do this for you guys. Right there. So this area, if this thing gets overtaken, you know, and you could even make it a little smaller, maybe like that, maybe like right there. So this area right here in silver, I mean, this is a monthly area, and it's coming into it. And so, yeah, you're kind of seeing how it responded to it here, and they tried to take it down, and they're losing it. So, yeah, it looks like silver, once it gets above, let's say, $36, this thing could really start to pick up here and start to move a lot. So the last thing I wanted to show you guys is yeah, just, you know, a lot of these giant moves we're seeing in the market, like open door and you know, well, even the nuclear stuff. Like I actually sold some in this account here, but there's just a lot of big moves happening. You know, CRISPR, Joby, you know, a lot of extended stocks and things making really big. Our QS finally started to give up the gains. So, yeah, with that, I think it's just the market's ready for a pullback or some sideways here. And yeah, with that, I'll see you guys on the next video. Enjoy. Take care.